just carry on. Good morning, guys.
Okay.
Good morning.
So we're discussing non-farm payrolls and the potential, what could happen, right? So non-farm payroll. But is non-farm payroll is the only one that I'm focused on? Well, no, that's just only one element, right? Non-farm payroll is only one element. What else is important, guys? What else is important? Obviously, unemployment rate. Yep, so unemployment rate is going to be as important. And then we have, which is less important, which is what? Average hourly earning. Yeah. Okay. Right. So 1, 2, 3 there. Who's writing? Who's doing that?
Sorry, it's me, sorry.
Okay, it's all right, no problem. Right, so non-farm payrolls, unemployment rate, we've got average hourly earnings. Okay, where is the focus? That's what you need to establish first, right? Going into this, where do you think the focus is? Now, how do I know what the focus is? Well, it's quite clear, right? What I look at is I'm looking at what commentators are talking about. What is Bloomberg commentators, Reuters commentators, CNBC commentators? What am I reading through newsletters, through websites that I review from media, right? Financial journalists, right? Financial journalists and commentators, where are they focused, right? And in addition to that, then I'm going to listen to what are economists' suggestions as well from their, whatever they release in regards to their articles or their, on their feed on Twitter or whatever it might be. So that's what you need to do. Generally, I listen to the points and what's being mentioned by commentators first, then economists, and then, of course, who else is more important than Fed members, right? The voting members, FOMC members, right? So what did Bullard say yesterday? What did these speeches, most recent speeches, what are they indicating? Through that, you'll quickly outline, okay, where is the focus? Quite clearly, the focus is not in, hang on, can I draw? Yeah, sorry. The focus, in my opinion, is not on average hourly earnings, right? The focus is going to be in two areas, unemployment rate and non-farm payrolls. So these are the two that I'm going to be focusing on, right? So in order to do that, so okay, what's the focus here? So we know that for non-farm payroll, right? Non-farm payroll, let's just go with job changes. We're looking at 260K. Yeah. So 260K for non-farm payrolls, right? And then, hang on, just give me a moment. Yeah. Okay. Unemployment rate. Unemployment rate, what is unemployment rate? Okay, 3.6% versus 3.6%. Right? So 3.6% is forecasted versus what was previous was also 3.6%, right? And we know that it's staying around this level for some time now. It's staying around this level for some time now, right? So let's see if I can copy this, all right? Oh, what else going on there? Save. Duplicate. Payroll. Unemployment rate. Okay. So the question becomes now, okay, that what I would say is, hang on. Now, let's put in other numbers as well, actually. So this, I think that might be a better option. So non-farm payroll, we could see numbers coming at, say, 280K. Unlikely, but let's go with, say, 320K. Right? And then we also have 240. We'll put so 250K actually. Because from what I've read this morning is that most are suggesting the non-farm payroll is coming at 270K, but on Forex Factories at 260 is the estimate. And then let's put in there, say 200K. So these are some of the numbers that could happen, right? What is your number? Let me know, guys. What is your number, right? What do you think is it going to be, right? Especially given the sort of speech I said earlier, right? The speech I gave earlier, which was, most importantly, that we know that corporations have already begun reducing the labor force. Okay, we know that, right? We also know that a lot of them have also rescinded their job offers that have already been accepted at the same time as well. So we know that most likely it's not going to be a higher number. It's going to be a number somewhere in this range or below, right? But what I'd be looking to sort of view is that what is the normal range? The normal range for me is probably sort of for non-farm payrolls to be okay, to be sort of in the okay region. It's between this range here, right? This is, this for me is normal range of expectation. Yeah. So if the numbers come in somewhere between sort of this range here, between 250 to 280K, that was what has been priced in. That was what was the guidance provided by, a survey of economists. And I don't see too much of a surprise thereafter, right? You see a bit of volatility and then continuation on the current theme, or the current direction, right? Or wait for new information to come in and then see where the moves go, right? But the question is, what happens if it comes outside of this range? Is your question then, isn't it, Mohammed? Right? Or are you with me up until this point? You get this bit?
No, it's the question. It's exactly the question. What happened if?
So it's important that you outline the range first, though, right? So, some people might say the number's 260, it's come at 270. Oh my God, that means this is going to happen, but nothing ends up happening in the market. So it's important that you put a range to that as well, right? But let's assume it comes in at 200K. What does that mean? I'm asking you guys. I want this session to be interactive, guys. So if it comes in at a lower number than the normal range of expectation, what does that mean?
That Fed was wrong. Correct?
Well,
not wrong, but
I don't want you to link two things that you shouldn't be linking, right? The Fed don't control these numbers, right? They kind of have they guide, right? Like a sheep herder would guide sheep, right? And sort of forecast a direction and have, a canine helping them to sort of, move the sheep around or whatever, right? But the Fed are not in control of non-farm payroll numbers, right? So it's not about the Fed being wrong, right? At this point, right? The goal from this non-farm payroll is that the Fed will be using this to make their own decision. And the decision is of whether they're going to raise rates aggressively, right? So you've got to see that the non-farm payroll will lead into, hang on, let me see if I can, okay, so I'll move this way. This result, the non-farm payroll, right, leads into Fed decision, Fed economic decision, or let's say IR decision, ideally, IR decision. Yep. So what happens with this result will lead into Fed's IR decision, interest rate decision, right? And then what happens thereafter is, I want to take a detour, is market participants react ahead of Fed. Yeah. And then prices move in anticipation of Fed move, right? And then it comes almost like full circle, right? Full circle, which is Fed Fed make decision. Right, Fed make the decision. Yeah. So this is this is almost the anticipation of the decision, right? So Fed actually make this decision on the date, and the question is, when they get to this point of a hair, was this price correct, right? Or was it mispriced, right? Maybe if I just undo that. Market priced correctly or mispriced. So this is what tends to happen, right? So now prices move in anticipation of the Fed move. Then when the Fed decision is made, the markets are going to question whether market priced this correctly or mispriced. And if they've mispriced, markets move again. Markets react. Again, all right? So it's almost like, this section here, right? This part here is Fed interest rate decision anticipation. Or yeah, so it's the anticipation based on this information. We then kind of hear from the Fed, we see that there's going to be, maybe a change or a policy shift by the Fed, right? Markets, are beginning to price that ahead of time, right? So that's we're forward looking. We look 3 months ahead, 6 months ahead. We're not looking at what's happened now, right? And then price moves in anticipation of what the Fed may do, right? And then the Fed make the decision. So actually this should be, so Fed will make the decision, right? And then market is either priced correctly or is mispriced, and then markets react again when the actual decision takes place, right? So this is going to lead up to all of this going to occurring. All of this is going to occur, right? Now, what you're asking is, if I just move this to there. So what you're asking is probably this point here, which is this there, right? So, oh, that's not what I wanted to do. Yeah, so price moves in anticipation of Fed, right? So the question is, what happens when it's a miss, right? So what I might highlight here is so this is 200K and lower, and this will be seen as a strong miss. Right, strong miss. This is the surprise element. So what's the scenario if this occurs? What does this mean for the markets? It's a question, guys. Anyone?
I think one of the strengths of the US economy is the labor market. So if the NFP is a bad number, it shows the weakness of the US economy.
Yeah, so what the market is going to quickly gauge is, hang on, clearly the market had assumed there's going to be, a drop in, changes in jobs, right? There was going to be a drop in that. We were expecting there to be already a shortfall, but how much of a shortfall has exceeded the market's expectation, right? Therefore, this is a worse off condition for the markets. That means we're probably heading towards a recession earlier than anticipated, or it's a strong miss. It's a weak number. It's a very weak number, right? So clearly there's some infrastructure issues in the jobs market, in the labor market. So clearly on this scenario, what would occur? So let's go through that. So strong miss. So strong miss leads markets to anticipate Fed beginning to what's the correct word? What's the correct sort of word that could be applied here? Fed diverge from rate, well, from aggressive rate hiking policy and or well, I can say, okay, let's leave it at that, right? Yeah. And then what I'll also say to add to that is review CME Fed tool to see changes in market expectation. Yeah, so if you look at the CME sort of Fed tool, it's showing that there's a higher probability of a 75 basis point at the next meeting. If that goes down to 50 basis point, then Fed, that's going to reprice, right? That's going to sort of, you know. Now, what does that mean for the markets then? What does that mean for the markets? Dollar weakness or stability at elevated levels?
They diverge. I think it's gonna be.
I'll just do this though. Dollar weakness or stability. Equities rally is what the focus will be there. Sorry, say that again, Mohammed. I didn't quite catch that.
Yes, that was exactly what I was. Yes. But at the same time, I'm thinking maybe market gonna panic because like the numbers are like and we are officially entering into recession. I don't know, like it's quite confusing. You know, I have these both views.
But Mohammed, you know, you're going with emotions there, right? You're you know, I'm clearly putting it a path there for you to use so that when it happens, you are prepared to react on the news, right?
Yes.
So your feelings shouldn't be taking part in this at all. We're trying to sort of remove the feelings of, you know, whether it's going to be like this or be like this, because what you've done then, you've become biased in a specific way, right? Rather than be biased, look at the full play, right? Look, understand what to anticipate, and then you'll be able to react better and make better judgment, better decisions, right? So if it goes above 300, I'm just being mindful of the time. So if the numbers come out a strong gain, what does that mean? Anyone? Should be quite easy now.
Inverse. So dollar strong and
so I'm not going to go through this process again, this bit here, but what I'll do is I'll just put in that text. Dollar strength. Yeah. And another key point to mention is, right? Okay, let me just put this in first. Dollar strength, equity weakness. Now, talking about the dollar strength, right, in specifically, right, it may not strengthen, right? It may not strengthen. Why would I say that?
Could you please repeat the question?
Say it again.
Could you please repeat the question?
Yeah, so what I'm saying is, if there's a strong positive gain, it's not a gain, but let's say strong numbers here, yeah? Strong numbers here. showing that, okay, you know, whatever happened is a bit of a misstep, but still there's a lot of, you know, good strength in the labor force. Why would dollar may not strengthen? Why is it possible that dollar may not strengthen, even though we have very strong numbers?
Maybe the average hourly earnings.
So just removing these two other elements, right? So removing unemployment rate and average hourly earnings, removing that for the time being. All we're doing is focusing on sort of, you know, hang on, let me just try and zoom out a little bit. Ooh. Yeah. So the idea here is that in a normal situation, if it's a strong number like this, and if there's less of a surprise to it, why may, or it could be a surprise to it, but why may dollar may not strengthen in that market?
I don't know. Honestly, I don't know.
Markets anticipated and bought in prior by review price action. So if we've seen now in this week so far that the price, if you look at the dollar index, if it's just moving in one direction, what does that mean? It means that there is a lot of speculators already pricing in, thinking that there's going to be actually a positive number, right? So it may not always be like this. It may not always be where you expect, you know, tick for tack, right? You know, this comes out, that means this happens. Well, no. Because what if markets have already begun to speculate, hang on, a certain portion of the markets are really sort of ramping up their bets, ramping up their sort of position size, assuming that the inverse is going to happen, right? And then what ends up happening is markets stay at that level, or profits are being taken because you have a bit of a push taking place at that point, right? So just be mindful. Dollar, it's not move higher. Yeah, the dollar does not move higher because from what I'm seeing now, have a look at it, right? What's been the week performance so far? How much is it up by on the week? Pedro, is there a way that you can check that on Coinfit?
You mean the currency or
Just the dollar index? Yeah, dollar index.
I think the euro is maybe the. Let me just check.
This week so far, maybe if you switch it to, let me go to the weekly time frame. Should show me that.
I think maybe the euro has been the weakest this week.
Now, all I want to know is how much has dollar gained this week so far? Yeah, so just looking at the candle. Hang on, let me just. Okay, I'm just looking at the weekly candle. Put in the measuring tool. Put it in from the close of last week, which is about there. But I'll take it from the low actually. Oh, zoom in. So yeah, so far, from the low to the high, it's made 2.86%. Okay, it's up by 2.86% just this week alone. Taking it from the open to where we are at this current moment, it's up by 2.22%. Right, and just looking at the type of candle, it's probably one of the largest candles that I've seen since, I mean, for some time. It's quite a large candle in the sort of the number of pips within that candle. Yeah. So clearly, there's a lot of exuberance already in the market, and that's almost giving you an indication that, hang on, is there a side of the market that's already pricing in not a strong miss, but maybe a good number? Yeah. Are you guys following me? Are you guys with me? Let me know. Maybe chat, yes. Mohammed, Basir, Tony.
Yes.
Okay, so yeah, so that covers sort of the non-farm payroll of this. And the other side of it is sort of the employment rate, right? That's where you sort of, you know what I mean, you get employment rate, and you just do the same thing here. right? You do the same thing here. Is that if it's anything above or below, right? Now it comes in at 3.5%. That's a great number. That's a good thing. That's going to give certainly the Fed a lot of optimism to their aggressive rate hiking cycle that they're looking to sort of carry out, right? But what if it comes in, say, I don't know, 3.8% plus or higher, right? 3.9, 4%. What if you see that clearly the unemployment rate has risen, right? Yeah, and then clearly that's going to be negative. Well, it won't be negative as such, because it's kind of strange, isn't it? How if unemployment goes up, you might see equity markets rally, but that's because that the Fed are less likely to raise rates as aggressively as they have been, right? So that's the sort of the conundrum that we're in at this moment, right? So you've got to pair the two together here. You've got to pair the two together here. You've got to not just look at sort of one end of the spectrum. You've got to look at both ends here. The focus is going to be in these two areas, certainly. I'd say it's less so I'm focusing on average hourly earnings, but imagine that this comes in pretty much in line, this comes in pretty much in line, but average hourly earnings come in much greater than expected. That alone, right? That comes in much better, right? That could maybe move the markets in a certain way. I highly doubt that. I highly doubt that. But hey, we can't sort of say this is the exact way, this is exact science here, because it's not, right? But yes, so this should give you sort of a breakdown of how to go about non-farm payrolls, how to understand what's taking place in non-farm payrolls this afternoon. What are market participants likely to do? What does that mean for the Fed? Right, so that's what we're sort of deciding here. But most importantly, what I would say to you, Mohammed, is that don't go with your gut feelings as much, right? It's not. I'm not looking to review it based on how do I feel about this, right? I'm just looking to be an observer, right? A market participant that observes market action, right? By doing that, you have less biases, less judgment of what's going to occur. You're going to be focused on what has happened, what are the scenarios that could take place, and when it's confirmed, you will react to it according to how you anticipate the move to occur, right? If it goes in your favor, let's say 6, 7 times out of 10, perfect. Some cases it may not go in your favor. Something else might sort of trigger something else to occur. So there's the unexpected to be sort of counted into this, right? But by doing it that way, you're methodical, you have a process, and you can almost be in tune with the markets and react as accordingly. Now, this isn't just looking at the macro data itself, right? This is just explaining the macro data itself, right? We've not touched on what you could do from a technical standpoint. Right? From a technical standpoint, there's highlighting all the key levels. Are you looking to take the breakout on the news when the news is released? Are you looking to take it sometime after when this volatility subsides, a few minutes later, right? Or are you waiting to fade it or wait for a much more confirmed breakout if it's not at those technical levels that you've defined, right? So there's many ways that you can actually trade this based on a technical standpoint. I'm not going to go into that because obviously I've taken some time covering this element. Yeah, I think that's a wrap in regards to understanding non-farm payrolls, and especially the one today, the 8th of July, 2022, non-farm payrolls. Yeah. Any questions at this rate, guys? Any questions?
I think it's clear, no question from me. Thank you very much. I think it's very important to structure it and to put aside the emotional side. I think it's very good to structure it. Yeah, nice. Thank you. Thank you very much.
Perfect. Yeah, I mean that's the whole idea. Is you don't want to be the retail speculator. because some retail speculator, because they hype themselves up and they almost believe in what they've thought, the process that they've developed, right? The theory that they've developed. They will almost want to take advantage of that earlier before it's actually come up, before it's even confirmed, right? So that's why you see just before the news being released, you start to see markets move and fluctuate. You know, and you see a bit more volumes and flows coming through. Well, that's clearly just pure speculation, right? That's a, you know, I'd class that as a gambler in most cases, right? You know, yeah. So going in with this type of method, it's certainly going to increase your probability of success here, but it may not lead to success with every single scenario. Ideally, this is the type of scenarios that you want to sort of, you know, this is the methodology that you want to apply with each scenario, whether it's a interest rate decision, inflation, you know, CPI results, or GDP to be expected anyway. Yeah. Cool. Pedro, anything that you wanted to add to that?
No, everything. It was a good explanation. Indeed, pay attention to those. Not just the number itself, but yeah, create a range. So maybe you're going to be aware of maybe how the market's going to react to the overall numbers. Maybe just another situation could be as well, add all that information that Gavin just explained, to look at the bigger picture on the charts itself as well, and maybe add if you're at the keys important support or resistance or a trend line, that may help as well to create your bias as well, maybe of maybe where to go. Create both of them and then combine together the if then scenario on both of the one scenario of doing what just Gavin did, and then look at the bigger picture on the chart as well, and then try to create game plans. If this happens, if price reacts from this key zone, there you go. I have my entry. Anticipate as well that step beforehand. And then just react to what price is doing. That could be a good structure as well. Yeah, combine both of them together. That would be my recommendation.
Yeah, I certainly think that you need this first. You need to understand this first, and then the second element is, of course, as mentioned, TAs. Then you apply your TAs, and then it's about getting your orders set up, right? So, you're not just looking at the TAs, but which markets are you going to trade? What time frame are you going to focus on, right? Then ensuring that you're applying the TAs required and looking at the higher time frame, and then drop down to this your main sort of base time frame where you're going to execute the trades. And then just don't be so easy to get into a trade either, right? You might want to test the trade out, meaning that you put in a small size and then you build that size as the market goes in your favor, right? Yeah, so those are some of the areas that I'll probably sort of stress and test really. Cool.
I agree.
Do you want to end the recording then, Pedro?
Yeah, stop it. Yeah, thank you guys.
Okay, guys, have a good day, and we'll speak soon.
Thank you.
Thank you.